Iran just launched 300 vectors to Israel during the night of Saturday. Is it the beginning of World War III, or is it just a military parade? That's what we're going to look at mainly this week. We're also going to touch base on CPI numbers, but mainly it will be focused on Iran's attack this last night on Saturday night, as I've just mentioned. Let's just have a quick look before that to this week data. The DXY, we are currently at 106 with a 1.65% increase this week. As you can see, the spike on CPI numbers, basically this last Wednesday, the 10th at 8:30 New York time. We are gonna have a look also to the VIX, to the VIX at 17.3 with a 6.59% increase this week. Basically, on Friday, we've seen a big gap at the same moment that the S&P dropped. The markets was basically on a uptrend this week until Thursday, and the drop happened on Friday. So we're going to speak further about this. Before that, about the bonds, the 2-year is currently standing at 4.9 with a 3% increase this week. As you can see, mainly on the CPI number, with the CPI numbers on Wednesday, we went from 4.75 to the 4.9 range. We are on the 10-year at 4.5 with a 2.5% increase this week. And on the 30-year Treasury bond, we are at 1.5 increase this week, standing at 4.6 yield. The S&P took a drop of 1.7%, mainly on the last day, as you can see on the 12th, on Friday. Basically starting the week around the 5,200s, we went a bit down, recovered on Thursday, and that was on Friday that we opened below previous closing and went down to the current 51.23. About the Dow Jones, we are on 2.4% drop, and the Nasdaq dropped around, we're gonna see the data or no, we don't have the data here, so I cannot tell you precise data, but standing at 18,000 at the moment, and we opened at 1,800 points roughly. That was what I wanted to mention. We are also gonna have a look to oil, which is in an interesting area. Basically, in the 80 to 100, we passed the 80 level. And a quick look to gold also, because we've crossed the $2,400 per ounce on Friday, before the actually just after the sentiment news, and after we got a drop back to the 2450, let's say. Starting with DXY, we are at 106 points at the moment, and as we are seeing on this large scale, that's a daily with daily candles. We can see basically from our top on September 2022, around 115 points. We went down to around 100 back in July 2023. Then we've been to the 50% of this downtrend. That was in October 2023. We were around 107. We went back about 80% retracement of that uptrend that was itself a retracement of the downtrend here. I don't know if you follow me, but basically now we will be tackling, we are in an uptrend that should lead to the 70 to 80%. since we've already done the 50% test, if it passes. That's from a technical point. Of course, it will be mainly fundamental, related to inflation's number, Fed's reactions, and technical is just about price levels, if I can say. If I continue on the VIX, we are at 17, like mentioned, so higher levels of the year. Since 2023, we've never been on those levels, basically above 15. We were mainly below that during this year. Last time we were at those levels were back in September, October 2023 last year. If we remember, our 2022 was way above those numbers we were currently standing at. So we were above around the 20 with spikes around 30. So we are kind in down a range since quite a few time. If you remember, big spike of March COVID crisis in 2020. So that was 4 years ago. We are now basically 4 years around. Yeah, actually 4 years from April 2020, from March 2020. So we have some way to go up, if I can say. Was this a bottom on December 2023, January 2023? We'll see during next weeks. Just wanting to touch base also on the 10-year Treasury bond, currently at 4.5%, like mentioned before. I've also added the dollar, the VIX, the DXY here, so you can see basically there's kind of a correlation between the dollar and the 10-year Treasury bond, which makes sense. Basically, the dollar gains strength when it pays more, because you get higher yields on the dollar you invest with a higher US 10-year Treasury bond. If you buy a 10-year Treasury bond at 10%, you have more incentives to go basically get your dollar and buy Treasury bonds than rather, I don't know, buy gold or buy a house in a non-United States. So that would not be valued in dollar. I don't know if you get my point, but basically it's completely logical. Just wanted to touch base on that, about the mechanism. Like mentioned, the S&P dropped mainly on Friday. So on Monday, we were opening around the 5,200 levels, and at Thursday closing, we were around 5,200 also. So the drop went basically from Thursday closing to Friday closing. We've seen a 1.5% downtrend. And if you remember, during the week, we've seen, let's see the exact number. During the week, we were at minus 1.7. So 1.5% of this down was on Friday. That was the day this happened. You can see the gold that has touched the $2,500 per ounce, with downtrend back to the 2350 level on Friday afternoon, basically. So on a weekly chart pattern, as you can see here, we are at unprecedented levels. We should see where it leads us, but we are close to the 2,500. Actually, if we take the exact percentage, that would lead us to about around 6.7%. So that's quite still an increase left to be done to reach those levels, but bull trend on gold. I've been speaking about this in 2 long episodes. Another one will be published next Thursday or something like this, and you'll be able to check deeper. We'll be able to speak further on gold. Wanted to touch base on oil. We are around 85 at the moment. So basically, we've touched down the 50% retracement of the uptrend from May 2020 to the top on January 2022. We've been down to the 50%. That led us to around 65, $70 the barrel on March 2023 last year. We went up back to the 50% of that retracement. So that led us to around 90. We've touched back 80, around 80 of this 80% retracement of this uptrend. And now we are at those levels. So logically, with the current also geopolitical situation, we might see basically the oil going up to the hundreds. So that will be something we'll know in the next weeks, but that's an hypothesis that is likely possible to happen. Last week, mainly CPI numbers, like mentioned several times, 3.5 actual number, while the forecast was 3.4. I'm not going to extend too much on this since we have the Iran situation, the Iran sack to tackle. Just wanted to speak a bit about the rates since it's quite important. If we look forward to September FOMC, we are at actually, if you add up those two numbers, they are actually 23% chance that we see no cut in September meeting, and basically 44% chance of one cut. So that will lead us to, let's say, 70% chance of only one cut or no cuts by September before the election. So on December, if we look at this, we see the highest probability is on 2 cuts. So that would be around here. If you add up those 3, that will do 9 plus 28, that's 37, plus 34, that would lead you to around 70. So basically 70% chance of 1 or 2 cuts by the end of 2024. That's 1 cut less than predicted, the 3 cuts that was expected before. We are going to look at next CPI numbers because that 3.5 went quite high above the forecast that was 3.4, but still not, like, only 1 point above. So we'll need more data and of course Fed comments about this. What I wanted to mention is the 1.35 billion cost of countering Iran's overnight attack. That's the cost of Israel. So just to touch base on this conflict, you should know that Iran used low-tech missiles and drones to do this attack. So we are not speaking about high-tech missiles, hypersonics, missiles technology that was used, for example, by Israel to hit Iran embassy around, like, back 1st of April. So actually, we're going to touch on this. Just wanted to mention the costs so we understand a little what is happening. So are we entering in a World War III at the moment, or is this just a military parade? Basically, Iran just saying a diplomatic speech by military attacks that are low tech, predictable, low intensity. You can see here that the cost of a ballistic missile is around $80,000. And the cost of countering that, as you can read here, is around 3.5 million to intercept a ballistic missile. So that gets you 80,000 to send the missile and 3.5 million to counter it. That gives you the proportion, because what Iran wants to show here, it's basically its logistic capabilities. So we are now basically we have some proofs that Iran can launch 300 vectors against Israel 4 to 5 times per week during a 3 to 6 time period, during 3 to 6 month time period. That's something definitely possible. So if you count up all of this, that will cost a lot to counter all these missiles on the defense perspective. And what Iran also wanted to do with this attack was basically to spot some errors in the Iron Dome defense system of Iran. So no, it's not the beginning of World War III. Like Iran have mentioned, it will not escalate. That's just basically something I've put this article, just, yeah, it's like the Houthi. Actually, the drones were provided by Iran. So you get basically $2,000 drones getting shut down by $2 million missiles. So that gives you the perspectives of that. Iran didn't use any of his high-tech defense. And I want to emphasize on this, that it's just a response to 3 top Iranian commanders that was reported killed by Israeli strike in Syria. So that was back beginning of April, like 2 weeks ago, where the Iranian embassy was hit in the Damascus, Syria, by Israeli strike, killing 3 top Iranian commanders. So from a geopolitical point of view, Iran had to react on this. It could not like for the purpose of intern politics. It could not just say nothing, so it had to answer. And that was basically their answer, because if they answered too big, basically killing civilians, for example, that would actually play the game of Israel. So they've played it low cost, basically low key, if I should say, just to make some diplomatic response, in a sense, a military parade. That could be the name, not the beginning of World War III, like we are seeing on some articles. That's not what Iran wants at the moment. They don't have any nuclear weapon. Basically, Israel does. So they are just showing that in case Israel do some actions like killing Iranian commanders, they will have some reactions by Iran. And Iran have said that next time something like this happen, they've said to UN, to United Nations already, that they will escalate if Israel make such other attacks that we've seen on the 1st of April. So yeah, no surprise. We are reading here that Wall Street expects from financial markets after Iran's attack on Israel. The risk is if the situation escalates and there is contagion in the region. So it's not really the case for now. Like we are really know, Iran have already announced that they will not escalate, and it was the end of the attack, and it was successful for them. So that's the thing to understand about the situation. So I wouldn't bet on a big move on the markets, on a big down move, for example. But that's still possible. We never know how the smart money is going to play this. So quickly, we're going to have a quick. We're going to stay sharp on Monday's opening. We're going to look at the mainly the U.S. opening, how the stocks react, and that will be for it. But like mentioned, it should not be taken as a World War III signal. Iran just wanted to give a strong response to Israeli attack on those three commanders back here, April 1st. About fear index, the fear and greed index, we are now below 50. So last week, if you remember, we were speaking about will we reach the neutral area, and we are now actually close from the fear area. So that was before Iran's attack. That could lead us after with latest updates. So we're gonna have a look to this tomorrow on Monday. That could lead us to the fear level, depending on markets reaction. So yeah, we're gonna have a look to the fear and greed index also, because we are seeing a kind of a change of trend from the top we've seen 2 weeks ago on the S&P. The next weeks are going to be very interesting for sure. We speak on next weekend, and I wish you all an amazing week.